hello and good day everyone. Today our group is going to be presenting about analysis of corporate financial performance, a trend and comparative study of Nestle Malaysia Berhad and Ajinomoto Malaysia Berhad. This presentation is specially prepared for Dr. Muhammad Hafiz. First, let's start with the introduction. My name is Naraina Amira binti Mama Anwar. My matric number is 2025-738-915. Okay, so in today's era of globalization, financial performance analysis is crucial for assessing a company's abilities to generate profits, manage assets more efficiently, and maintaining the liquidity for long-term sustainability. This report employs trend analysis and 5-year financial comparisons to examine the performance of two major players in the food and beverages F&B industry in Malaysia, Nestle Berhad and Ajinomoto Berhad. These reports aim to study uses of financial ratios and 5-year trend between year 2020 until 2024, understand the information about Nestle Malaysia Berhad and Ajinomoto Malaysia Berhad. Financial performance analysis help identify financial strength, risk, and performance differences. This financial performance analysis report also is useful for investor management and policymakers in decision making. Background of company Nestle Malaysia Berhad. Established in 1912, subsidiary of Nestle Société Anonyme, Switzerland. Nestle is a major player in Malaysia's FMCG, which is fast-moving consumer goods and F&B industry. Well-known brands such as Milo, Maggi, Nescafe, KitKat, and Nestle. Nestle also operates 6 manufacturing plants across Malaysia. Nestle is also guided by the motto of good food, good life principle. Nestle focus on nutrition, innovation, and product quality. Strong growth supported by the cost efficiency and brand diversification. Actively practices ESG and initiatives such as sustainability and waste reduction. Moving on to the Ajinomoto Berhad Malaysia. Ajinomoto Berhad Malaysia is established in 1961, subsidiary of Ajinomoto Co. Incorporated Japan, specialized in seasoning and amino acid-based food products. Well-known Ajinomoto brands is Ajinomoto, Seri Aji, Chimix, Ajishio, and Ajimix. Production plant located in Kuala Lumpur. Ajinomoto also operates under Ajinomoto Shared Values Philosophy, which is ASV. Focuses on healthier and sustainability food solution is Ajinomoto trademark. Produce low sodium and functional food products. Ajinomoto also have strong commitment to environment sustainability and ESG practices.
Hi, Assalamualaikum. My name is Nur Atira Azra binti Sohaimi. So in my part, I will explain to you guys about financial ratio, focus on liquidity ratio, current ratio. So, based on the table above, Nestle Malaysia Berhad showing us that current ratio remain below 1.0 throughout 2020 until 2024. We have 0.59 times in 2020 and 2021, increased to 0.83 times in 2022, but then declined to 0.61 times in 2023, and for further to 0.55 times in 2024. This trend is mainly due to the increase in the company's current liability, which outpaced the growth in current asset. In contrast, Ajinomoto Malaysia Berhad showing us a much higher current ratio throughout the time period. This experienced declining trend from 5.49 times in 2020 to 1.77 times in 2023, rebounding sharply to 5.28 times in 2024. So this pattern is mainly contribute changes in between current asset and current liabilities. So next is quick ratio. Based on the calculated ratio above, Nestle Malaysia Berhad showing us a consistently low quick ratio from 2020 until 2024, rising between 0.20 and 0.26 times. This indicates that after excluding inventories, Nestle liquid assets were much lower than its current liability. For Ajinomoto Malaysia Berhad, on the other hand, is strong quick ratio across all year. It's decreased from 4.74 times in 2020 to 1.27 times in 2023 before rising to 4.54 times in 2024. This demonstrates that aside from the decline in 2023, Ajinomoto had a strong liquidity position with liquid asset greatly exceeding current liability. So next is leverage ratio, debt ratio. Nestle Malaysia Berhad showing us consistently high debt ratio from 2020 until 2024, from 80.5% to 85%. This indicates that a large portion of Nestle assets was financed by liabilities, reflecting a high on debt. In contrast, Ajinomoto Malaysia Berhad maintained a much lower debt ratio throughout the period, from 14.6% to 31%. This shows that Ajinomoto relied much less on debt to finance its asset compared to Nestle, indicating a more conservative capital structure and lower financial risk. So this will be my last part. I will explain about times interest earned. Nestle Malaysia Berhad showing us a trend in its TIE ratio from 2020 until 2024. The ratio was 21.44 times in 2020, increased slightly to 21.98 times in 2021 and 2022. This indicates that while Nestle had a strong ability to cover its interest expenses in the earlier years, this ability weakened over time due to either decreasing earning before interest and tax or increasing interest expenses. In contrast, Ajinomoto Malaysia Berhad did not report a TIE ratio in 2020, but showing up extremely high ratio in 2021 is 171.3 times and 2024 is 120.34 times. This ratio dropped significantly to 24.35 times in 2022 and further to 5.24 times in 2023 before rebounding sharply in 2024. This high TIE ratio in 2021 and 2024 indicates that Ajinomoto had a very strong ability to cover its interest expenses, mainly due to high EBIT and relatively low interest expenses.
Hello and Assalamualaikum. My name is Mujaza Afina. My matrix number is 2025790221. So I will explain about the average collection period ACP for both company Nestle and Ajinomoto. The average collection period ACP measures how efficiently a company collects cash from its credit customer. A shorter collection period indicates stronger credit control, faster cash inflows, and better liquidity management. So in 2024, Nestle recorded an average collection period of 8.48 days calculated based on receivables of 146.8 million ringgit and revenue of 6.22 billion ringgit. This suggests that Nestle is able to convert its sales into sales very quickly, reflecting strict credit policies, strong bargaining power over customers, and efficient receivables management. In contrast, Ajinomoto had a significantly longer collection period of 33 days with receivables of 58.3 million ringgit and revenue of 636.4 million ringgit. This indicates that Ajinomoto takes a longer time to collect payments from customers, possibly due to more lenient credit terms, weaker negotiating power, or a customer base that requires longer payment cycles. So the large gap between the two companies highlight that Nestle manages customer credit more efficiently than Ajinomoto. Faster receivable collection, improved cash flow stability, reduces the risk of bad debts, and lowers reliance on external financing. On the other hand, Ajinomoto's longer collection period may increase liquidity pressure as funds are tied up in receivables for a longer duration. So next, I'll be explaining about the inventory turnover for both company Nestle and Ajinomoto. So inventory turnover measures how efficiently a company manages and sells its inventory within a given period. A higher inventory turnover ratio indicates that inventory is sold more frequently, reflecting strong demand forecasting, efficient production planning, and effective inventory control. In 2024, Nestle recorded an inventory turnover of 5.22 times, which is consistently higher than Ajinomoto, which recorded only 4.91 times. This means that Nestle was able to sell and replenish its inventory more than 5 times during the year, whereas Ajinomoto did so slightly less frequently. Nestle's higher inventory turnover suggests better stock management, where products move quickly from production to sales without being held in storage for extended periods. This reduces holding and storage costs, lowers the risk of inventory obsolescence or spoilage, and improves overall operational efficiency, which is especially important in the food and beverage industry. In contrast, Ajinomoto's lower turnover ratio indicates that inventory remains in storage for a longer period before being sold. This may lead to higher carrying costs and may signal slower sales velocity, less efficient demand planning, or a more conservative inventory strategy to avoid stock shortage. That is all for me, so I will pass it to the next person. Thank you so much.
I will explain the data return of asset ROE. Return on asset measure how efficiently assets are used to generate profit. Nestle maintains strong ROE such as 19.3% in 2020 from a net profit of Rm 552.7 million, while Ajinomoto record low ROE in earliest years. But in 2024, ROE increased to 43.8% due to a sharp rise in net profit to Rm 401.4 million. Next, return on equity, ROE. Return on equity show how well the company used shareholder funds. Nestle record very high ROE above 97% for most years, showing strong return to shareholders, while Ajinomoto ROE was low in earlier years but improved significantly to 55.3% in 2024, reflecting better profitability. Lastly, net profit margin. Net profit margin show how much profit is earned from sales. Nestle maintains stable margin, for example 10.2% in 2020 and 6.7% in 2024, showing good cost control, while Ajinomoto's margin dropped to 3.51% in 2022 but increased sharply to 63.1% in 2024 due to much higher profit. Overall, Nestle shows stronger and more consistent financial performance in terms of efficiency and profitability. But Ajinomoto experienced fluctuation but show a strong recovery in 2024. Therefore, Nestle is more stable while Ajinomoto show potential growth.
Looking at the financial ratios, Ajinomoto shows stronger liquidity with higher current and quick ratios indicating better short-term financial strength. In terms of leverage, Ajinomoto carries lower debt and financial risk, while Nestle relies more on debt financing. Ajinomoto also has a stronger interest coverage. However, Nestle performs better in operating efficiency with a faster receivable collection, higher inventory turnover, and stronger cash flow management. Finally, for profitability, Nestle demonstrates more stable and stronger returns, while Ajinomoto experienced some volatility but showed improvement in 2. Overall, Ajinomoto Berhad demonstrates stronger financial stability and lower risk compared to Nestle Berhad. This conclusion is based on the analysis of liquidity, leverage, operating and profitability ratios. Ajinomoto shows a strong liquidity with high current and quick ratios indicating a good ability to meet short-term obligations. The company also maintains a low debt ratio which reflects a lower reliance on debt and reduced financial risk. In addition, Ajinomoto records excellent interest coverage, especially in years with high DIE ratios. Its average collection period has improved over time while steady inventory turnover supports efficient cash flow management. So overall, Ajinomoto is more suitable for investors who prioritize financial stability and growth. Okay, turning to Nestle Berhad, the company demonstrates a stronger profitability in most years, recording higher ROA, ROE, and net profit margins compared to Ajinomoto, except in 2024. Nestle also shows a better operational efficiency with a faster receivables collection and higher inventory turnover, which supports steady cash flow. But however, Nestle has a high and increasing debt ratio resulting in higher financial risk. Its declining profitability in 2024 suggests a need for improved cost management and tighter debt control. In terms of investment recommendation, Ajinomoto is more suitable for investors who prioritize financial stability, strong liquidity, and lower risk. Meanwhile, Nestle may appeal to investors who are willing to accept higher risk in exchange for potentially higher returns. So overall, both companies should continue strengthening their financial ratios to support long-term growth and competitiveness.
In summary, the financial performance of Nestle Malaysia Berhad and Ajinomoto Malaysia Berhad from 2020 to 2024 highlights clear differences in their strengths. Ajinomoto shows stronger liquidity and lower financial risk, making it better able to meet short-term obligations and more suitable for investors who prefer stability. Nestle, on the other hand, performs better in terms of efficiency and profitability with stronger inventory management and higher returns. However, its higher debt level and declining profitability in 2024 increased its financial risk. Overall, Ajinomoto is more attractive for risk-averse investors, while Nestle may appeal to those willing to take on higher risk for potentially higher returns. So that is all from our group. Thank you for listening.
Makes it hard